to yet another Asian session. Persuasion. The Asian session hosted by yours truly, Mack. Let's get it. So right now on GJ, it looks like we had a pretty decent size breakout out of 151 for 490, 450 around this area. So basically that was the no trade zone. We broke out of it. Now I'm expecting to get a pullback, a minor retest, probably on the hour candle. Open on the 8 p.m. candle. Give me 1 second. I'm almost set up here. Good morning, good evening. Okay, so David Kaz is already in the building. Okay, so welcome to another session by yours truly, Mack Attack. Oh yes, I apologize for the little lateness. I was picking up my mom at work, and in the city that we're filming that show, The Blacklist, and yeah, pretty much. So blame it on the Blacklist. It's a little delayed. We missed the breakout, but thou shalt not worry. We can get the pullback hopefully at 8 p.m. I've seen this happen a lot of times. We can get a slight pullback and retest that previous no trade zone, which will be the retest area. So we have a retest zone here, which let me go ahead and mark it down. And we're gonna have Jivan come in real quick soon. He's gonna break down gold, I think. And yeah, he's telling me to relax, so I'm gonna relax. So we got what, 20, 30 viewers. Let's just wait a little longer. Anyway, let me just map out the zones first before anyone shows up. So what do we have here? So we got basically our next zone, which will be 151, 700, 800. If you round it up to the downside, then 700. Okay, cool. After that, we have this area here. So we're gonna bring this down here to that support that that was first rejected, couldn't break out of, then bounced out of it, retested that high again at 152 even, and then dumped. So we're gonna have that in consideration when we're coming up. Since this is the 15-minute time frame, this was not that long ago. We're on the 16th. That was yesterday at pre-New York. After New York opened, waited maybe 2 hours, and then that was the breakout at 151, 850, I believe. So, all right, so we have 59 viewers. Okay, getting up there. So, thank you. Let's see what's going on with gold. Dude. Yeah, I'm definitely getting a new PC to stream because this streaming in 1080p, it's not working for me. It's too slow for my raw, baby.
Hello, what's going on, Mack?
Hey, Jivan in the house. Hey, Jivan.
You just started the stream up?
About 10 minutes ago. We're just mapping out zones. We're gonna get this.
I think there's an echo with the Zoom.
I'm not sure. I'm gonna put on my headsets real quick and see how that works with you. Maybe it's somebody that has the their speakers up. Well, anyway.
All right.
Let me go ahead and check. Give me 1 second.
Yo, can you hear me clear?
Yeah, I can hear you perfectly fine. Super fine. I'm gonna mute everyone and then just mute yourself. So, yeah. Thank you for coming, by the way.
Yeah, man, no problem.
So, and I forgot how to mute. Oh no, it's right in participant. So mute all. Okay, so everyone's
Yeah,
in
just
here.
do your thing though. But were you talking about GJ first?
Yeah, I was talking about GJ, how we just basically dismissed this little breakout. Nothing to fear. As I was explaining before, at 8 p.m. we definitely should get a minor pullback to get a decent entry. So missed moves, not quite yet. Let's just sit down, wait, and in the meantime, I'm just gonna mark up the higher time frame zones, starting from the daily down to the 4 hour, and then you can see where can we get an entry on the 30-minute or the 15. So let me set up a chart with no lines. So this one. All right. So far, this is our daily high at 152.230. So let's mark that up there. Daily low at 150.700. I'll round it up to 800. Okay. Go on to 4 hours. See what's going on here. All right. So very important that we're gonna see where the channel or range is on the 4 hour. So we have 152 even, and down here, which is the double bottom at 151 flat per se, if you round it off. So what I'm gonna do is just gonna draw a zone of rejection here due to that wick. So rectangle, rectangle, rectangle. And bring this up here. I'm not really interested much in the daily low because I'm already seeing that wick here. So, and the other one, just bring it down here and just clean up a zone of rejection as well. Let's bring it up here. There you go. So pretty much that's our current 4 hour channel, guys. It's a see how many pips in here. So basically around 110. So that's good. We can keep bouncing off from this zone to the next one. So far, we're still in this range. To get out of it and look for the next target, which will be, give me 1 second. I'll go into my next line here. 152, 600, 680, and we have 152, 860. This is coming from previous highs and previous zones that I have looked out on the previous stream actually, and we still haven't gotten there yet. So we have 152 880 and 152 680. So right here and right here. So somewhere around there. So this will be the next target, and this will be the second target, clearing a small range of 25 pips. So 20 pips. Let's go on to the 30-minute real quick, see what's going on here. As I mentioned,
still very bullish.
Extremely bullish on this on the lower time frames as well as the higher time frames. So we're gonna go ahead and mark the current no trade zone, or whatever you want to call it, consolidation, order block, and just a zone of rejection as well here, and another one down here. So that's our current basically retest zone, if you want to call it, or no trade zone. So I'm gonna call it retest zone. Of course, expecting DJ to give us a pullback, a nice swift pullback on the 8 p.m. Candle on the 1 hour. I'm actually not even gonna look into it for now. Just wanna wait. And in the meantime, that's all we are looking for. It's a pullback, so wait on a retest. And let's go on to gold real quick. See what's going on with gold.
So you're looking for a retest of that zone through Asian session or overnight, and then continuation to the range highs.
Exactly.
Yeah,
Basically,
okay.
yeah, you said it, described it out completely like how I want it. Just a retest to this zone. If we stay
Yeah.
around the zone for a little bit, that's fine, perfectly fine
If
with
we were
me.
to break below 151.35, you got marked out, right?
Yeah,
And come all the way down to that 151 level again,
exactly.
but fail to break, would you still be looking for buys there too?
If we fail to break,
On the, like if we were to pull back down there again, like let's just say for the new daily candle or something,
well, this new
would you still say buys are valid?
I can't say right now because I'm still waiting for the new daily candle to open. So depending on momentum and seeing how the daily candle is gonna form, based on that, as soon as we get to the 151 area, I'll just be looking for a clean breakout and see if we could get that wick fill down to 157.80. If we pass 157.80, then I'll be looking for sales. Other than that, we reject the zone, I'll still be looking for buys. This area here,
Yeah, I'm still bullish bias as well.
extremely bullish.
I'll share my view like after you
Yes,
do your gold and
please.
TJ, you know?
Yes, please. I love your breakdowns. So we're gonna go ahead and just finish the GJ breakdown quick. Which what I do is that I just simply annotate here, waiting for retest, hopefully, right? So I said that just as a joke because guys, GJ doesn't give us that much of a retest sometimes. So I'm just gonna write up here for clean buys. Wait for what happened. One of the things that I typed. Oh, I moved or whatever. Yeah, so that's all.
The magic yellow line indicator, yeah, that's coming after.
Yeah, you gotta change the color though. So this would be the retest zone. I don't know why they erased. And then we have like better buys. Or better buys. And this is way too big. Or cleaner. Alright, way break above 151, 500 with a clean bullish 15-minute or 30-minute candle. And
It's not for sale, the yellow line indicator.
and last but not least,
Yeah, you gotta develop it yourself.
send the code for cleaner sales. This is it for sales. Wait, wait for confirmation. With a rate below 151, 380, and past the one past the 151, 320 wick, right? All right, so that's like a 6 pip difference. So once you pass the wick, then you're off to the races. All right, so that's it for GJ. These are basically the parameters that I'm looking for during the Asian session. I'm gonna go ahead and just look into gold real quick. Not that much. I'm not very. This shit looks so bad. It looks like ass. Uh, anyway, for gold, I'm not really gonna even talk about it for now. So far, overall, on the higher time frames, it's looking bullish to me as we are, um, we broke out of this area. We actually did break above this resistance at 1714. Retested that previous support. Continued up. Created a new high at 1736. Then now it started to look like we were making higher highs and higher lows, but now as this 1 hour, 4 hour candle closed, this one right here, you guys paid attention due to I think it was retail sales today, right? Negative news and we only had a little minor boost on on gold. So really, I believe it was just priced in. I actually had an alert set up, didn't break the alert, and it went back into the range. So now it's very uncertain. I think for a decision, we will have to break below 1725, 1720, or break above 1740. That's like the main key level here. And let me go ahead and give this to Jiven. So I'm gonna make you host right now.
Oh, if you want me to, I can share my screen now.
Yeah, I'm gonna make you a host.
All right.
Give me 1 second.
Yeah, I'll just be sharing my view and analysis on gold, GJ, and a couple of main pairs, just for Mack stream here, and what I can see for some potential trade ideas on these pairs overnight through Asian session, London, New York. But
right, because that's the meaning of the stream, is just to plan for pre-London or London, even New York. But if we do get a trade that's very good looking, we might as well just take it, right, for at least 10, 15 pips. But
yeah,
let's go ahead and see this.
All right, can you guys see my screen?
Give me 1 second.
All right. Okay, let's get it popping now. Yeah, my bias is very similar to Max. I just want to describe it from my viewpoint. I don't know if can you guys see my screen right now in the YouTube chat or the Zoom chat?
Can see it.
All right, perfect. So I always like to look at the macro and micro fundamentals as well, because it really paints a picture of how money is moving through the markets as a whole. So one way I do that and to view investor behavior is by looking at certain economic indicators, not technical indicators or like an EMA or like a Fibonacci or anything like that, but by looking at something such as the global stock markets, which will tell you a lot about investors' risk appetite or how optimistic or fear-filled they may be, right? So when I'm looking at the global stock markets and across every single region, I'm still seeing continuous highs printed and bullish market structure across the boards. This alone is still telling me that investors are still confident in economic recovery and an optimistic sentiment, and we can still continue to run bullish market structure on our risk currency versus safe haven pairs. So I'm not looking to see what the stock market is telling me about the economy. I'm looking to see what the structure of the stock market across the world is telling me about investor behavior, the people that actually move the markets, whether you want to call them the one percenters, the whales, the institutions, doesn't matter to me, whatever verbiage you want to use. The market makers, I don't care. And then another great tool alongside that is looking at some of your safe haven currencies standalone. For example, the US dollar, the Japanese yen, and the volatility index isn't a currency or a safe haven, but it's a good fear or greed reader of the North American markets. So when you see that your primary structure on your safe haven currencies stand alone, like the dollar by itself, which is a risk currency, which is a safe haven currency, is bearish market structure ever since the pandemic initial crash, right? The Japanese yen standalone is in bearish market structure. The Swiss franc is primarily bearish. And you see that your global stock markets are bullish, you're going to see this common pattern across the board where you zoom out on the 4-hour chart or the 1-hour chart on any of your risk currency against safe haven pairs. You're going to see this bullish market structure since March 2020. It doesn't matter if it's here on AUD JPY or GBP JPY. When you zoom out, you're essentially going to see the same market structure, whether it's AUD, USD, which might be a bit different, but overall still primarily bullish. So what this tells you is that after the pandemic market fear was priced in and digested by investors and caused that crash and dip to be created on the stock markets, it caused risk currencies to drop to a more favorable price, right? And it caused money to start coming out of it caused money to flood the safe havens. That's why gold exploded during that time. That's why US dollar was strong for that first initial month. The Japanese yen was strong for that first initial month. After those price setups happened and the central bank started coming in to, I think someone got a baby talking or some shit.
My bad, Jimmy.
But yeah, after, who was that, Osteoman? Bro, mute yourself. Sky, Osteoman, didn't you sell GJ before the weekend or something? Focus on that, bro. Anyways, so as soon as the central banks started providing support for their respective economies, and you had the Federal Reserve start pumping the US economy, the Bank of England start pumping UK's economy, etc., on any risk currency versus safe haven pair, where your basket of risk currencies is like your New Zealand dollar, Australian dollar, Canadian dollar, British pound, euro, etc., right? And those are the main ones I look at. And then your safe haven currencies are the US dollar, Swiss franc, and the Japanese yen are the main ones we look at. If you look at any pair that has the risk currency as the primary and the safe haven currency as the secondary, you're going to see this overall macro bullish market structure that's been respected since after that COVID crash, March 2020. Obviously, the movements are not exactly identical, but you're going to see the same thing. So we can see that when we zoom out and we look at Euro USD, and you want to come out and look at the 4-hour here on Euro USD, March 2020 COVID crash, bullish market structure, right? You go to NZD JPY, March 2020 crash, bullish market structure. You go to NZD CHF, safe haven, risk currency against the safe haven currency, downside move, right? That market crash during pandemic markets, ever since the central bank started providing that fundamental support to their economies, those low demand area prices gets bought up, you have this bullish market structure. So when you understand that concept and you're looking at a pair like GBP JPY, you have certain fundamental concepts at play that are going to keep the market bullish, even though the pandemic is still very much active around the world. One of those factors is the fact that we've had optimism regarding Brexit. Another one is the fact that a lot of the fear and negativity and uncertainty from the pandemic has already been priced in and it's already been digested by investors. The third fact is you have the support of the Bank of England supporting the British pound. And then the fourth is you have the British pound against the Japanese yen is what you're trading. And you know that your British pound is going to hold strength during times of economic rebound, and your Japanese yen, a safe haven currency, standalone, is going to be bearish. Or the US dollar, even though it's had a bit of this cat bounce, it's still been bearish since that pandemic price point, right? So now when we're looking at GJ, there is no fundamental reason to look for a reversal or long-term sell on any risk currency against safe haven pair. All right? As long as we still have all the flood of vaccine headlines, yeah, thanks for the reminder, Bricky. As long as we still have the continued flood of vaccine headlines, which investors are going to price in, showing more signs of economic recovery and beating COVID, as long as we have the continued support and stimulus from the central banks, as long as we have this, and you have to understand, when the central banks buy government bonds and give the governments of their respective countries free money to use within the markets, right? Let me rephrase that to make it a bit easier to understand. So the money initially comes from the central bank. They dictate the currency and the flow of money for their respective country. The government will sell bonds, government bonds, to the central bank in exchange for cash. It's a loan, right? The cash that the government gets from the central bank, they are not going to be putting that money back into the economy or giving it to the people. The majority goes back into the markets to make the 1% even richer. And the same thing for the money that goes into the corporations, right? They're not going back to give it to the poor or give it to the needy. They're putting it back into these markets. So you've had this optimistic greed train with the market just moving in these waves with these buyers and sellers transactions. What are those transactions? Well, you have buyers continuously print new highs At these new highs, they cash out of the market, creating pullback phases. These pullback phases don't break overall bullish market structure, and you extend into a new high, just repeating this process over and over again. Anybody who is trying to look for a higher time frame tops on these pairs, like if you're trading NJ, AUDJPY, NZD, USD, all you have to fucking do is wait for pullbacks, a demand area to be respected, which is usually a previous high, a retest of bullish market structure, and a continuation right back to the high, right? So for example, here, let's look at the reaction between buyers and sellers. You have price come from this low area, right? 132. Buyers enter the market and extend clearly into a new higher high in a bullish trending market, right? At this new high, and remember, nothing's going to go up forever, nothing's going to go down forever, because eventually market participants want to exit and reap the rewards of their profits. Nobody's going to stay in the market forever. So when you have this new high printed, what do you have happen that creates this pullback? Is this a shit ton of sellers entering the market? In my eyes, no. In my eyes, you have the buyers liquidating their positions, exiting out of the market. The only way they can exit out of the market is if there are sell orders on the other end to relieve them out of the market. You can't have one without the other. It's like a hedge fund working with a bank, right? They grab the other end of the order flow. Okay? So you have buyers exit positions and create this pullback. This pullback goes all the way to retest this previous low, but fails to break lower. It just goes down to that demand area. This is how supply and demand works. The definition of demand is pushing price to a favorable demand area to purchase that whatever product, service, currency, right? Nobody wants to keep buying at the top. That's not a good demand price. So that taking profits of buyers, sellers jumping in hand, pushes price down, creates that market wave to push price down to a more favorable demand area to have buyers re-enter the market and then do what? Extend into a new high. What we can notice is after December, GJ's pullbacks have gotten smaller and smaller. It's just been a continuous bullish upside moves, and we can identify that through the corrective versus impulsive plays. So let's just say here, from this low, we create a high here, right? This is the high point. For an extended period of 2 weeks, we do not have enough order flow to break these highs, but do any of these sell moves break previous lows or break higher time frame bullish market structure? No. It's just liquidity generating in the market to have enough order flow to break that previous high price point and extend into a new high, or waiting for a fundamental catalyst to extend into a new high. So even though you can have GJ having some of these aggressive sell plays day to day, these sell plays, you have to understand, we're first in bullish market structure. We printed a new high. The sell plays that are coming from this new high are just pushing price down to a more favorable demand area without failing to break previous lows or structure. As soon as you have enough buyer order flow in the market, you finally break and retest above that high and continue into a new high, which just happens to be a bit higher. You have a pullback continuation. When you have a trending market and you're trending bullish, there's only two ways to generate liquidity in the market and have a continuation with the trend. All right? Either you have an upside push to create a high, a corrective play, which is usually like a 50% correction, and this is your creation of a higher low. This is your pullback and price coming to a more favorable demand area. More buyers jump in the market, and then you continue back up into the previous highs in a new high. That's option one to get order flow and liquidity into the market. Option two is what we all see as a consolidation phase. This was a very large consolidation phase. where you don't break significant highs and lows, but you also don't break the structure that's intact, which in this case is the higher time frame bulls. And you're just generating liquidity in this consolidation phase until you finally break out to the high with the overall structure, right? So regardless if it's these higher time frame, more aggressive pullbacks, or a pullback we saw like this, which happened to come from the end of the month of February, you can see end of February printed a new high. At the end of February, to set up the new monthly candle, we had this pullback. A lot of people at this pullback started to think GJ's a mass sell-off. We're going to start melting. We fully corrected that upside move. They ignored the fact that it was the end of the month. They ignored the fact of profit taking by buyers. They ignored the fact of the new month setting up order flow to continue for March. They ignored the fact that this sell move did not break previous lows or market structure. And then once you break out of that corrective structure on the lower time frame and you have buyers jump back in the market, you just continue back with the trend. Understand? So with that concept in mind and understanding fundamentally our global stock markets are bullish as fuck and there's nothing stopping that anytime soon. Unless we have COVID mutate into a zombie infestation, or the vaccines lead to more deaths than COVID, or we have a war on Iran, or a Cold War between China and the US, unless we have something that brings new fundamental fear, there is no reason for these investors who have been riding the stock market buys, or who have been riding GJ buys or GU buys for the last 8 months to a year, right? Look at this structure. What reason would they have to want to stop this? Think about that logically. You guys ask yourself that question logically. If you are smart money and you've been in buys here, 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 why would you want to stop it? Right? If there's no fundamental catalyst to stop it, you're just going to continuously have this bullish market structure across these main risk currency against safe haven pairs, with highs being printed, pullbacks, and continuous highs, right? Or like we said, these minor consolidation phases where it could be stressful to play these consolidation phases, but as long as you wait for the breakout, you're just continuing back up. So for the last 8 months, fundamentally and technically, anybody who's been trying to call a top on GJ, on GU, on Euro USD has just been foolish. It's just been nothing but ego, trying to call a top, trying to call a reversal, trying to be a hero. Now, does that mean GJ doesn't have sell plays that happen? Of course. You have highs that are printed and you have these pullbacks that happen. But if you don't understand that you are counter trend trading whenever you play those sells, and if you don't get out of the market once a more favorable demand area is reached, you're going to get your sells slapped. So now, with everything I told you guys, is there any reason to sell GJ? Is there any reason to sell any risk currency against safe haven pair? Is there any reason to sell NZD USD? Or is it best to wait for the pullbacks and buys? Right? Have you seen sellers really winning since March? You guys answer that question logically just looking at it. Right? And it's because of that concept. You have a risk currency against a safe haven currency. So it's best just to play with that fundamental sentiment and play with that trend. So when we're looking at GJ for execution points and we're zooming in more to the market structure and everything else, right? What I've been looking at is we've had a bit of this corrective lower time frame pullback structure. I always like to analyze this. Whenever we have a new high printed, I like to analyze on the lower time frame this corrective pullback structure that's being respected. And as soon as we break out of that structure, it's easy buys back to the highs. Even if it's a minor bear structure and you break out of it, it's an easy buy play back to the highs. Even if it's a consolidation phase and you break out of the consolidation phase, it's an easy fucking buy. Even if it's these minor pullbacks and you patiently wait for the pullback to come to an end, it's an easy buy. right? And it's not hindsight trading because I've made thousands of dollars actively trading this way. That you can see like on my Telegram channel, you can see over the last year. You can see on my YouTube channel calling these trades for you guys for free week after week, day after day. But I know jealousy can cut deep, right? So you have this guy coming on, spitting straight knowledge, making it very easy to understand, connecting the fundamentals and the technicals. So it's not about hindsight. It's about continuously adapting and staying reactive to the real-time markets. And capital hungry and over and on my YouTube channel or even with Mack here, we have just been riding the GJ buys since like October 2020 for that reason. So now what I'm looking at on GJ here, and we come down to like the 30-minute, is you can see as these new highs were printed, we had some profit taking. We had buyers start exiting positions. This started creating some lower time frame corrective sell structure, which you guys are going to see respected on here. I like to go right to the 1 minute, right? So for here, after these highs were printed, for about almost 5 business days, we had sellers in control, just creating this corrective pullback phase, pushing price down to a more favorable demand area, which happens to come around. Because that was the previous high. That would have been a great retest for buys to me, was 150.5 if we went down there. But anyways, we didn't go that deep. We could see buyers starting to jump in the market and seeing more buyers impulsive candles starting to break out of this bearish market structure and showing us buyers entering the market again. So just like Mack said, if we could get a retest to 151.500, even if we get a retest to like these lows again at 151.2, I'm still bullish on GJ and primarily looking for the buys, and my target is back to these highs and new highs. All right. Does that make sense for GJ? I would only be looking for GJ sells, safe sells at this point below 150.800. All this rejection in this area where you can see buyers have continuously respected. Fundamentally, we're bullish. Technically, we're bullish. We're continuously having buyers print new highs and just having pullback phases or consolidations and new highs, right? So that's what I'm thinking about on GJ there. And then now for gold.
Ooh, this is gonna be Gucci.
Okay, so with the pandemic markets, right? You can see that gold when we go to the higher time frames here. What? Oh, so you can see gold did the exact same historical repetition as it did during the 2008 financial crash. Because gold is what? Gold is a precious metal that is treated as a safe haven around the world. Central banks hoard gold, country governments hoard gold. Gold has held its value through history due to its rarity and due to it being a precious metal. But anyways, for an investing purpose, it's a safe haven. So you can see 2008 financial crash, we had this extended upside play on gold because of this economic uncertainty. And then years later, after it was priced in, you start to have this corrective phase. And as economies rebound years later after the financial crash, this deeper correction, still maintaining higher time frame bullish market structure, right? So from this point, we had a high created. Same thing we watch on market structure on the 1 minute. Same thing we watch market structure on the 1 hour. It's all the same shit. It's all relevant. You had a pullback phase, higher low created, and then now we have had with the pandemic. So with first it was trade war, then it was the potential Iran war. Then it was you had Brexit, Iran war was about to pop off. You had an active trade war. Then you also had the pandemic, right? So you had all this fundamental fear from the period of 2018, 2019, and 2020 that led to a new impulsive high being printed. And then as those highs were printed out, as we had the pandemic market impact priced in, and since that point, we've had a flood of vaccine talks, we've had more market optimism, so we've had gold enter this corrective phase, right? When we zoom in on gold here on like the daily time frame or the 4-hour time frame, you can see primarily gold has been in this corrective bearish market structure, right? In this descending channel, you can say. But we want to identify two things now, right? Every time you have gold sellers create an impulsive low, you have a very, very aggressive buy bounce in this channel. You have profit taking by the sellers, and you get a very aggressive bounce that you can dissect with exactly the market structure. So we're gonna see exactly the price action that happened here, and why we have been anticipating buys from these lows here and starting to scale up so far, and what we can see to come. But this might change with the Fed interest rate tomorrow. So let's look at this here, right? Let's look at when gold created this impulsive low November 26th, 20th, right? You can see that we had sellers in control in this bearish market structure. Sellers impulsive plays, pullback, sellers impulsive plays, pullbacks, etc. Until we peak this new impulsive low. From this point, we had buyers enter the market and create this 1,000 pip upside move from 1770 to 1870, breaking bearish market structure and creating an intraday higher high, right? From this point, you had a pullback that happened to be 50% size of the upside move and was a 500 pip pullback, creating what? A higher low. And then a continuation to the upside, creating more refined bullish market structure that ends up being respected for the next month, all running to 1960. So do you guys see this chain of events here? Take a picture, take a mental image of this right now, okay? Take a mental image of this. Now, bare bones, without the key levels, without anything else, look at this, all right? You have sellers in control and bearish market structure respected for an extended period of weeks. Right? Whatever way you want to put it. We can even come to like the hourly chart here, just to make it even cleaner. Right? So you can see whatever way you want to put it, for an extended period from the end of February all the way till the 10th, we had sellers in control, right? Sellers plays pullbacks that didn't break structure, and then continuous lows created all the way until we came to 1700 flat. Now, this is a high risk, high reward buy area that we called on the YouTube session. If you go to my YouTube page, right? From this point, this is a high risk, high reward buy area, essentially starting to call a bottom. But what did we have take place? We finally had a buyer's impulsive move that created a new significant high, right? And we had an upside move from 1670, we'll say roughly 1680 to fucking 1740, 600 pips. From that point on, we had a rejection from this new high that was created and a pullback play that was roughly 50% size of the impulsive upside move, creating a flat candle body support at 1700 flat here, creating a higher low and having buyers jump right back into the market, back to these previous highs. So right now, we have more refined bullish market structure being developed. Right?
Yes, sir.
So the only difference is compared to that November point that we were looking at here, the only difference is from this impulsive upside move and pullback play and continuation up, we haven't broken into a new higher high yet. So you can see that bearish market structure, we can check off that we've broken out of there. We're buying at 1700 G by bullish cupcake. You said Wednesday or Thursday, and we'll see. What the fuck are you talking about, Osteo, man?
Bullish cupcake. What the fuck? Bullish cupcake?
Yo, he's talking about something irrelevant, bro.
Yeah, Osteo, man, you've been taking L since 2017. Just keep it quiet in the chat, bro. I'm trying to explain something to people.
No way.
You know what I mean?
Sheesh. Damn.
Just leave it, bro. So I'm trying to explain something to the public.
That's gotta burn.
If this was the biggest L contest, you'd be taking the stage right now, speaking for hours, but it's not. So anyways, like I was saying, we've had this bearish market structure that we can validate we've broken out of there, right? We've had buyers jump in the market that broke above previous lows and broke above that previous lower high point as well. We had this pullback phase that did not go to retest previous lows and created a higher low instead, creating some more refined bullish market structure for us to work with here. Okay? So when I look at my key levels in that, this is what I'm looking at. Just to even keep it simpler. Now, what we have here is gold entering a consolidation phase. We can't say that gold is a sell just yet. Just because it's consolidating doesn't mean it's a sell. It's still respecting bullish market structure. It's still respecting the breakout of bear structure. It's still respecting the bullish market structure. And it's still consolidating at the highs. So we could very well have gold break above these previous highs and break out to go to the 1751 area and then potentially see what happens from that point. Okay? The only way I could see sells, and Ted and I were talking about this earlier, was if you guys don't know, tomorrow is the Federal Reserve interest rate. Usually when the Feds are speaking and when Jerome Powell is speaking, 8 out of 10 times it gives the US dollar a short-term boost. And we are trading gold against the US dollar. So if the Federal Reserve tomorrow gives the US dollar a short-term boost, and technically we break below 1721 and we break below this price sensitivity zone, if we break below this price sensitivity zone, we got marked out in higher time frame key level. If we have US dollar strength from Jerome Powell and the Federal Reserve, if we break this bullish market structure we identified, I'd only be looking for sells on gold below 1721, back to these previous lows, and then watch accordingly. You know what I mean? Other than that, even if gold comes down to retest 1721 again and fails to break, I'm still in a bullish bias. And if it breaks out above this previous high at 1739, I'm still in a bullish bias. All right?
Hey, Javen, what confirmation for that break below 1721 time frame, hour?
I'd be looking for intraday candle closures, 30-minute, hourly, 4-hour. That would show me, because on the lower time frame, you might get some reactions, price breaking below and some wicks. But I'd be looking where on the 30-minute, hourly, and 4-hour, where the actual candle bodies are closing. Because gold does that stuff where gold could, especially with the Fed interest rate, gold could do a vicious wick down all the way to 1715, but the bodies itself end up closing still back above the range, still respecting structure. So I would need some intraday bearish candle closures below 1721, some nice bearish candle closures below here to show me more sellers pressure to revisit these previous intraday lows if the Federal Reserve gives us that US dollar strength tomorrow, right?
Yeah, and conversely, same with the 1740 level, right?
Yeah, 1740 is strong, so...
right? But right now, what I'm digesting is that we still have broken out of bearish structure. We still have buyers active in the market. Even though we haven't created a new high, we at least did revisit this previous high from last week. And even though we are consolidating, this consolidation has not yet led to a shift in structure. So I don't want to start guessing that it's going to drop from here when it happens. You get what I'm saying?
Right.
And you even have an upward consolidation from the 15th on.
Exactly, right? And we could see something like very similar like this. So where gold does this a lot, when it does finally break out of structure, it does things like this. So look at this. Because the market's not always going to have continuously impulsive moves and be trending bullish or like just sells every single day, every single night. Like you're going to have sometimes where volumes and volatility slow down, market consolidates, you come towards holidays, end of months. You get what I mean, right? But this is a great example. So you have this bearish market structure, and then you have the same thing where you have more refined bullish market structure developing. Now, people can start to make mistakes where in areas like this where you get some strong rejections and you start to consolidate on the intraday time frames, they start saying a resistance is being formed. Look at these bearish candles, look at these rejections, right? But if the overall bullish market structure doesn't break, if we don't break below the previous highs, this is just liquidity generating in the market to continue right back up. Just like here, people might start taking this as a support and trying to call a bottom. You get what I'm saying? You have this massive sell move, and then you start to create a technical support here. But this support area is just the consolidation phase to get more order flow in the market that doesn't break structure or the highs of that area, and then you continue right back down. Or you have this little consolidation phase and continuation down. Now we're looking at more buyers momentum developing in the market. So I don't want to start calling this like sells yet.
Yo, man, my bad to cut you off. What's the time frame say on your chart right there?
This one is on the hourly. We're just looking at the hourly structure right now.
Okay, thank you.
So that's why I'm just alongside with the higher time frame key levels. I'm watching this. As long as gold, even if it comes down to 1721, I'm still bullish. Above 1739, I'm bullish. Above 1751, this is some more higher time frame bear structure, would be the safest buys. I would only be looking for sells on gold with some safe intraday candle closures below 1721. That shows me more sellers pressure and sellers order flow and breaking that structure. You know what I mean? That may come with the fundamental catalyst tomorrow afternoon of the Federal Reserve interest rate announcement. Where if that gives a short-term boost to the US dollar, we are trading gold against the US dollar, and that can create some sellers pressure and buyers exiting the market on gold here, right? Which would create a downside move. But pretty much that's what I'm seeing. I'm still in a bullish bias on GJ. I'm still in a bullish bias on gold unless we break below 1721. GBP USD similar to, I don't want to talk too much now. I can keep talking about like GU, Euro USD, USD CAD, US 30, any pair you guys want, but I'm gonna give it back to
by break he means
now.
he means a closure, not just a wick, you know?
Yeah.
Make me host. yeah.
All right, I'm gonna give it back to Mack
Thank you,
now because
brother.
it's his
Thank
stream,
you, bro.
you know?
Really appreciate that. That was fucking gold.
Yeah, dude, thanks.
Do my thing right now. That was Jeevan, guys. Capital Hungry. His Twitter is Capital Hungry. His website is www.capitalhungry.com, and he's got an Instagram as well, coming back strong. Also, main feed will be YouTube. So just hit a like and subscribe, and always follow him, because when it comes to fundamentals, even whatever it is, when it comes to Forex, he's got it all down to the notch, per se. So yeah, this is my channel, and this will be his.
But Ario, thanks for having me. Hey guys, I gotta get out of here. I'll see you guys later.
Bye.
Appreciate it.
Everybody say bye, Jeevan. Bye, Jeevan.
Take care, everybody. Brother Mack. I'll just talk to you guys later. See you guys later.
Yes, sir. So that's it. Guys, go hit like and subscribe, and just give him a follow if you're not following him already. So going back to GJ, see if we've gotten any movement so far. So far, nothing's going on. Like I said, waiting for a pullback, praying hands, hopefully. That means that on GJ we hardly ever get pullbacks out of a breakout. It's very hard. And it's looking like we're not gonna get that pullback. You know, it's been 36 minutes so far since Asian Open, and it's just, you know, booming. I honestly, I wouldn't like an entry at the moment or past when I started the stream, like at 7:20, 7:30. It was already, you know, out of this retest zone or range, whatever you want to call it. So to me, it was already invalid as you know, it had moved already 10 pips. And you know, if you get a trade within that breakout and you're stuck into in a 15 or 30-minute candle, you don't, you know, you don't get that sensation that it's either going to continue up or down when you have a retest zone and you're in between two quarter points, which in this case will be 0.800 and 0.500, right? So that break was at 0.500 right on the dot. That would have been my entry, but you know, I was actually picking up my mom from work.
Yo, Mac, not to cut you off, bro, but
Yeah.
I don't know if your chart's showing up on Zoom or not.
Oh, I know. Let me see what's going on Zoom.
I just see all these damn ugly faces on the screen, you know?
Oh, yeah, because I'm not sharing it. Ugly ass motherfuckers. There's only two of us.
Arner, it's a damn shame you talk about those other
Oh,
people
no,
like
Gary's
that.
in it too.
Hey, Gary.
There's only two of us and Gary. Ugly ass
No,
motherfucker.
I only see me and Mac on the screen, bro.
Oh, okay, you got saved, Gary. I was about to call you Jerry. We got Jerry and we got Kerner. So we're like the floppy versions. All right, so I'm gonna share it again, and that should work. So you guys can see the zoom, 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 zoom. Voila! So now you guys can see clearly from the YouTube chat. Or
Like, your levels are getting better since you've been presenting, running your own stream.
Excuse me, what was that again?
I said your levels are getting, you know, they're more visually stimulating since you've been running your own stream.
Oh, I thought you wanted to fight. Okay. Yeah, I guess the levels have been getting stronger. What I like about, you know, hosting the session is that it kind of like helps me to not overtrade, because if I open my MetaTrader, my computer slows down. So win-win situation there. Other than that, I can easily go onto my phone and click buy or sell. But I'm not trading the Asian session unless there is an actual move going on, like you know what happened here for at least 10 pips, bro. Come on, tell me you're not gonna take that, man. Stop playing with me, bro. Come on. Sheesh. Up to the next level, you know, even the support of the next level, right here on the outer block, right there, bang. Bang, bang, right there, bang, bang, right, motherfucking there. So it hit, still not to the top of the range, which it should continue up and hit it. Bro, that would be epic if we can like formulate some sort of support around this area. You have 151, 750, 740. And you have 151, 670, 660. So basically, with the magic line indicator, so that's the name, Gary. Gary bought it, but he don't want to cop and say he didn't. But yeah, he bought the indicator, $700.
What'd you say? Were you talking to me, man?
The indicator you bought, man. What's it called?
I bought an indicator.
Yeah, the magic line indicator.
Oh, you selling the rocket ship indicator again, Mac?
No, that's too much. It's a lot of drawing. Talking about Jevon's indicator. What was it again? Fuck, man.
Oh, the yellow line indicator.
Yes, the yellow line indicator. Come on, come on, stop playing. Where is it, bro? Where's the fucking indicator? Alright, so basically something like this, right? And this is black. It's not yellow. It has to be yellow. Let me change that. default. So it's gonna be that, and color it's gonna be yellow. So basically something like this around this zone here, right? Some bouncing around here, and then we can either break down to retest these previous zones, or break above to create a new high on the 30-minute and new 4-hour channel. I'm gonna get into the 4-hour. Okay. Perfect. And what price is dictating to me is that we're gonna continue down. We're creating lower lows and lower highs stuff right now on the 4-hour, but as long as price respects 151 flat, I believe we're gonna continue up. Just that we had this little nice price correction starting at 152 flat, basically a 100 pip move to the downside, of course making the charts a lot clearer, nicer, and you have the option to go ahead and swing the trade if you want to, if we get to the 151 zone and get that retest that we're looking for. So it's not much compared to how the weekly looks on well, basically anything, since December, I believe we've gone on a straight bull run, no stops. No, I had a couple positions holding from there, but I closed them yesterday. No, I'm fucking with you. The bottom from here is like let's see, on the weekly down this fucking wick right here, it's 137 flat. That was the main fucking key zone right there, key level, key area, alert, whatever you want to fucking call it. Those were the buys. If you're a fucking swing trader and you know how to hold, you have diamond fucking hands, you definitely would have gotten an entry right motherfucking here. So this would have been your entry, right? Let's see. Right here, bang. And then 1,500 flat. A little stop loss here and there, let's call it 1,500. I think less than that. 50, yeah, 50 pip. 50, yeah. Bring forward 50 pips in damages, right? But let's see, what about this weekly candle here that turned bearish, but it didn't follow protocol and it continued up? Your entry would have been at this moment here. All right, so my bad, I was muted. All right, I don't know why it's not showing. So Going down to the 30-minute, I don't think we're gonna get that pullback like I said before. Still really not much to look at. Well, what I can plan for during the Asian session will be for pre-London actually. So let's go and see what we could do during the what the heck during the pre-London session. So 1 a.m. in the morning before I fall asleep. Try to see if we could set up some buy limits, maybe sell limits, depending on the case. So this is currently invalid. We already, went over this. Cleaner buys are already playing out. Whoever took those buys, congratulate yourself. If you keep holding, I can guarantee you that, due to the fact that we're not retesting during the Asian session, if and only if, remember, if and only if you wait until 9:30, which is the Asian stock market open in China, and you get the pullback during that time. Just what you could do is just either hold, or if you start seeing rejection and you start seeing this range breaking down again and coming down to your entry, go ahead and sell, because at the end of the day this is gonna retest down here and continue up. So you have to keep that in mind, that at 9:30 there's gonna be some volatility in the market coming from China, with the Chinese stock exchange opening. So you can have that pullback down here and then continuation up, or you can hold, might just stall for a little bit. The stalling can maybe help you to look for the second entry you're looking for, or maybe just go ahead and cut down your entries by half. Secure half of your profits and let the rest run to the next level. In this case, which will be 152 flat. I also have this wick here, which will be the daily high. So in case you want to target that, I'm just targeting the bodies of those candles, 4 hour. Well, if you go back here, you can see better. Oh man, I was watching this movie. Oh, insane movie. Oh man. Jason Statham. What's his name? Parker. Yeah, Parker with J-Lo, baby. Yeah, she's hot. So I don't know why that came to my mind. Oh, because it was about money. It's about jewels and shit. So far, yes, if you want to keep on waiting, holding, you got diamond hands, go ahead and hold the fuck out of this, because it's going up, baby. But so far, I do personally want to go ahead and get a retest down to this zone, so to go ahead and get a better entry. Maybe catch the wick of that 4 hour retracement and get around here on that retest zone, because because if I see price heading down there and I start looking into the smaller frames, per se 5 minutes, and I start seeing rejection, what I'm gonna expect next is basically just a pullback. It's just a minor wick on this end, and then a continuation up with a bullish strong 4 hour closure. So yeah, that's what I'm hoping for. Let me see if I can draw it down here. God damn, man, my head, my neck, it just breaks. So yeah, something like this. Now you want to see another candle just coming in here. Actually, no, let's just keep the body outside that zone. So body will be around here. Right? And then your wick to the upside on the next 4 hour. This is like the perfect, ideal, miraculous, that's a word, miraculously, miracle, the miracle 4 hour candle, which would be a slight retest to that downside, closing above the range, which is 151,500. Clear PPL, psychological price level, whatever you want to call it. If you have a markdown, then you're gonna notice that on the smaller time frames, these points tend to get hit a lot. I'm gonna go ahead and type them down right here in case you all have forgotten. So starting with your psychological price levels. So let's type in here. This is on GJ guys only. So you have so far we have. I'm actually gonna do these levels here. 150.800. Then you have 151.200, and you have 151.500, and you have 151.800, right? And then you have 152 flat, and after that, continuing up, we don't see really much, but we have a slight tap on 152 200. You guys can see which it will be here. Alright, so that makes sense. Alright, so let me make this a little bigger because you guys can see. Oh, please take a screenshot, if you want to keep that, because this is very helpful when it comes through. Let's say the ways that I would use this in case you're new to trading or you're not 100% sure what your target should be. You kind of lost here. So let's say that we do get a break above. Let's say we break above 152 flat. That 4-hour resistance, and we're free to go. The only thing we have in mind is just this little target, which is the wick fill. This little wick fill here. This little shit here, right? That little wick fill. Fuck. So basically, it's not really much to go after. It's only, I think it was like 20 pips, not even, like 12 pips, after the break. So you get that break, you're looking for 12 pips. It might just reject until you fuck off and then go back into the range. So, you might as well just take partials around there. No, fuck, shit, I don't want to close this. So you want to take partials around there, and might as well just call it a day if you don't see that potential that it's going to continue up. Always trust your analysis and your whatever gut feeling, whatever the fuck you want to call it. So let's going back here, going back. So what do we see here? Perfect. I wouldn't say perfect, but very safe or good. Lower time frame switch to a higher time frame confluence that we're gonna continue up based on simple market structure like higher highs and higher lows. So let's go ahead and see where the higher high is and the higher low will be, because we still haven't created it. Just move this a little bit. Move it a little tiny bit. Alright, so market structure will dictate that we, coming from a support. What do we got? What do we see next? If we're going on a bullish trend, after a support, we will see a move up, which will be your first point, which will be your high, right? Normally will be close to a resistance, right? Then following the high, we're just gonna keep it as a high because so far we're not able to see if it will be a lower high or high high. And at that point, just leave it as a high. In this case, this is the support and this is the high, right? Very simple. Next, what can we expect? We're gonna look for somewhere around the this zone here or this zone here for the next low to be created. Usually it's gonna play out to a nearest support or even resistance if we can, if we decide to start creating that lower high. So going down here and creating the next low, that can possibly be from a support like this area here. So we're gonna just bring it down here, and this will be the next low, right? Now in this case, it's kind of like the decisive moment that if we continue down, then this will be basically a lower low and not a higher low. So when price continues down and breaks that support, then structure is going to dictate that we're going bearish. Sentiment is bearish. So if we hold support and we continue up in this case and finally create the next high, so in this case that would be your typical very simple market structure created of higher highs and higher lows. I love explaining shit like this. It's so simple. So higher highs and higher lows. But it's always important, when it comes to GJ, you can see that a lot. And your final breakout. So that's what you're gonna expect once you start seeing highs and lows being created, especially on the 4-hour. Lower time frame works the same thing if you're looking into scalping, micro scalping, or macro scalping. I forgot what it's called, which is like hyper scalping or whatever. You're gonna be looking into higher highs and higher lows a lot, and higher highs, higher lows, lower lows, and lower highs a lot on GJ, especially because that's mainly how you're gonna see market structure forming mostly all time frames. So you have your higher low here and your higher high, and next, so you have your support here, higher low, and your continuation up. So then you have little parameters and shit to follow, like that support created from the higher high, higher low, which is it should be a straight line like that, which is basically your zones of resistance and support, right? They tend to hold. Anyway, let's just get back to the normal scenery. So we're gonna look just for entry points on the 30 to the 1 hour. Yeah, that works. So far so good. It looks like we're retracing, so that's actually good. I'm balling out of control. I called that shit. No, I didn't. I'm actually bullshitting. I said that G just a piece of shit. It's not gonna retest. But anyway, we still have the parameters on, so that plays out in my head. I'm gonna count it as a win if we retest the retest zone, because honestly I don't give a fuck. At this point, GJ is just fucking with your heart. Yeah. Anyway, guys, that should be it for GJ. Now let's go on to gold. See what's going on with the old TP toppy gold. Gold has violated me lately. Violated me hard as fuck. I have had these highs created on the 1 hour, filling up fucking wick, and then just bam, dropping insane, just drop. So massive drops. This is unexplainable. Basically, I just call it market manipulation. We've had that. I got roasted here, and then again here. Massive fake outs. Then again here, and then again here, and massive range zones like here. Yeah, pretty much it. So it looks kind of nasty, not gonna lie, I'm actually squinting on how nasty that shit looks. So on gold, really guys, if you're not very experienced when it comes to trading, like myself, I'm not very experienced. I only have about 2 years under my belt, so I'm not gonna call myself experienced. I really have a lot to learn. I'm not gonna dabble with gold stuff right now. Just taking a quick look at it, and going into the daily and seeing these two massive fucking wigs. Just the fuck are they doing? Are they grabbing liquidity? Are they just rejecting? You never know. So if you drop me a fucking Fibonacci here and say the 61.8 is just retesting the lower side of the Hancock of my bitch's shit, and right now it's just gonna continue up because gold is gold, bitch, and gold will never die. Ho, bang. No, don't come at me with no Fibonacci shit. Come at me with some technical knowledge and some fundamentals like China's fucking just hoarding all the fucking gold, so gold's gonna go down, or up, whatever. Just give me some shit. Gold is a scam. I hate it. Yes, gold is a fucking scam. I hate it. But I haven't been able to read the chat. My eyes are squinting. I'm tired. What? I'm gonna keep on going. Mack can't speak, man. I can't speak. Well, how about you come in here and you do my job, you fucking retard? Fucking hate people like that. Mack can't speak, fucking keyboard warrior. Shut the fuck up, bitch asshole. I'll beat the fuck out of you. Dumbass. Dumb little kid.
Have you checked out AU or no?
Yeah, I'm gonna check it out right now to see what's up. Nothing, bro. You gotta beat these trolls with like some aggression. He's probably crying right now. I can't speak. Shut the fuck up, rages, bitch asshole, whatever the fuck your name is. He pulls a fucking emoji brown. You're probably from India, that's for sure. You dumb asshole. Hey, you.
Yeah, AU earlier I was looking at 77.41 again for support to look for buys. Obviously it closed under, so I never made the buys.
Mm-hmm.
And you know what I mean, it's broken clean under it so far.
Right.
On the 30-minute it broke under. The last hour it came under, closed under. So right now I'm waiting to see how this hourly goes, if it's gonna go up to retest it. And if it actually retests and starts rejecting under, then it may be a possibility to sell it some more, but I'm not sure.
Give me 1 second here. Let me just check out the high time for that. So I remember it had a massive drop, which was from here, from that 0.800, from 80,000 down to 76.
Oh yeah, you're talking about a couple weeks ago, yeah.
So 1, 2, 3 weeks ago. After that,
yeah,
I looked at it again. Let me see what's going on. So
yeah, the last 2 weeks it created a support, and then this week came down so far, tried to push down, rejected, and then as well as yesterday it pushed down and rejected again.
This is the support you're talking about, right? Right here, 0.75 900.
The supports. I got 77.41, which is acting as resistance at the moment, and then I have 77.15, and then 7,700 flat.
So at 77.41, which is right above here, right? That's your current resistance. Yeah, it looks way too close. So this is the daily. Now going into the 4 hour. What I'll see, yeah, actually no, it's actually good. It's actually 7. Let's say 650, right around here. That's your 4 hour resistance. And then after that, you have another little notch here at 900 or 7,800 if you want to call it even. If you want to call it quarter point, would be 7,800, yeah. But other than that, I don't see much movement on AU. I know how you trade, so you must have a lot of fun here seeing these ranges. Going down here, getting the wick fill, and continuing up. But not much activity, to be honest. But you really know.
Oh yeah, for sure. A lot of people, it's different style. You know that.
Yes, sir. And that's the beauty of it, right? That you're able to find some magic in these zones. While I can see shit, to be honest, but I know you can. I know for a fact you can, because this is only the 30-minute.
How long you hold your positions for? You got to be holding them for.
I've seen his averages. No, bro, he doesn't.
Oh, you talking about for AU?
Yeah. How long you hold?
Some positions, you know what I mean? Some positions, they may only be 6-7 pips, but you'll grab it in 15-20 minutes. You know what I mean?
Okay. So you're trading large size on it to get those moves.
You know what I mean? Everyone has to take, you have to do what you're doing according to your plan, but it depends. Like when AU ranges, you play ping pong with it. You get me? I've just learned that if we're in, let's say, a heavy bullish market, I'm not going to be heavier on my sells within that ping pong market. You know, I'm going to be heavier on buying than I am going to sell it. But if I feel that, you know, a small range of, let's say, 9, 10 pips, and I can bounce off of it for 5 or 6, I'll close out right before the next resistance, because it could easily tap that and then drop again. So I might sell it again, but that's not something anybody should be trading, because that's bad impulse. You know what I mean? You're not doing no 1 or 2 trades a day with the style of the way I trade. You know what I mean? You're trading much, much more because of that reason. So, you know, the best thing to do is keep on the higher time frames, the larger way of, if we're bullish, just look more for buys during that range. But it doesn't mean that you can't make those sells as well. You know what I'm saying? It's just, what is your normal risk amount? You know, if your normal risk amount is, let's say, a standard, then your buy positions will be a standard. But if you're thinking about counter trending and selling it, well, you might do, let's say, 30 or 40%, so a 0.30 or 0.40 instead. And you know what I mean? 6, 7 pips, 6, 7 pips, 5 pips, still 5 pips. At the same time as people are telling me that they haven't made one clean trade this week of anything over 20 pips, I've grabbed more than 20 pips within the same time frame that they're waiting. You know what I mean?
Oh, great. Everybody has a different style. Just curious. I was just curious.
Like, that's why you see a lot of me talking about like the 1 minute and the 5 minutes, especially when I'm looking at the EMAs. You know, like this trade, I was looking for buys originally. Straight up, I was looking for buys to look for support on 77.41, and I was like, once I saw the 15-minute candle keep showing resistance above at 77.48 on the 15-minute time frame. Once I seen that start happening, I said, you know what? Let me just see if this is gonna bust upward and make that clean bullish candle, which it didn't. The next 15-minute candle came down below and actually wicked down, but then closed still under 77.41, which is my support resistance level. When the next 15-minute candle came out, now we're under that level, as well as we're under the EMAs. So the next 15 minutes, it came down, pushed down to 77.35. And now we're in the next 15-minute candle, which started at the 9 p.m. Eastern time. And now we're going up right now to possibly retest the underside of 77.41, which I'm expecting to possibly act as a resistance now, as well as it's a resistance on the underside of the EMAs on the 30-minute. If you follow all that, then you'll understand, you know?
It makes sense. It makes sense to get the retest in this area. You know, create some support. I don't know why I had this marked, but it's actually holding right now. So following up with that, of course, if you look at this, is just a 15-minute. Now we it looks like a very decent size, you know, drop here. If you were looking for sales, it's 11 pips on 1, 2, 3 15-minute candles. So you know, you have to basically have a lot more patience, I guess, on AU when it
Oh
comes
yeah,
to
bro. You
trading.
have to be much. That's the thing. I know a lot of people like trading higher volatility, like GJ or gold or US 30, and that's, believe me, I love those. I love those. Not GJ, but the other ones I love trading as well.
Oh,
It's just,
Yen, the
with
dragon.
those trades, you only need to trade a couple times, 1 or 2, and you're good. Because you catch a good chunk. But it's the same style. It's the same setup, just slow. You know what I mean?
Exactly. And you look into commission, and people say, "Oh, why are you taking a trade that's only gonna be 5 pips when your commission is hardly covering that
Uh-uh.
trade?" So that's
Hey,
a
either
question
way,
that I have.
profits are profits. You know what I mean?
What's that again? What's the answer?
Either way, profits are profits, bro. Just
Profits are
keep it moving.
profits, right? So always, you know, you got that commission always in there. For me, I'm a very, you know, picky guy when it comes to commission. If I'm paying more than $7 a lot, then I don't think it's worth it when it comes to the brokerage. Hence why I use
Oh yeah, I understand you on that. Yeah,
right.
for sure.
Hence why I use the trader's domain. I'm paying, you know, about $6 per lot. So that's good enough, you know. So let's say, you know, you're doing a one lot and you do one pip. That's what $10. So basically, in the one pip, you're already covering your lot size, and having like a $3 profit, right? Because you know you're paying your $6, $7 in commission, and then you have whatever profit. So that's good. So you know, little by little, doesn't really matter how many trades you have on your book. You know, as long as you're profitable and you're keeping your consistency, and when it comes to your commission, if it's regardless of an ECN account or standard, you know, standard, it still has a lot of um, of commissions as well as ECN. A little less, but not as much. It still has commission. Most brokerages are gonna charge a shit ton of commission, so just be prepared for that. At the end of the day, you're gonna have to pay for it. So
Yeah,
taxes and
man.
commission.
So yo, bro, like as you were speaking, I was still monitoring AU. So how it kind of just pushed up like that
Yeah,
and checked. Now the 5 minute just it respected. It made a little minor push up, and then once it tapped the EMA on the 5 minute, it just dropped again. You know. So
exactly.
this is what I'm
Let
saying.
me.
It's slower motion. Like if I were to do the same setup on gold, that right there in itself would have been like a 25, 30 pip
Yeah.
move. You know what I mean?
I wanna, I
With
wanna,
the
I wanna
win
see
ratio of gold.
something, Nick. My bad. Let's figure something out because this is one of my questions. So it's coming from me personally. But let's. I was about to speak Spanish. Let's set up the EMAs on AU. So I want to go ahead and set them up based on you, on your charts. I mean, so I'm gonna set this up real quick. Give me 1 second. So I think it's 20, 50, 200, right?
Burner, the EMA you're hitting those on a 30-minute primarily, right?
Usually, yes, it's the most consistent. Yes.
20, 50, or it was 16 for the 20. What did we
No,
change to?
you got 14, 21, 50, 200.
14, 21.
50, 200.
All the levels the institutions look at.
How do you know that, Gary?
I don't know. I forget how I got the numbers.
Gary's lying, bro.
But yeah, like you know what I mean. And then obviously, if you're looking at AU on a smaller time frame, especially 1 or 5 minute, you are gonna see some. You're gonna see some fake outs from time to time, of course. You know what I mean? Because obviously that would be the 5 minute. I mean, the 15 minute wick creations to the higher time frame. You understand?
Yeah, give me 1 second. Let me look for just regular EMAs that we can.
And you got all the time.
The fuck is wave indicator? I don't even know wave indicator. Take this shit out. I doubled it. Yo, give me 1 second here. Man, I hate this shit. Take this shit out. Delete, delete, delete. Yeah, give me 1 second here. Built-ins. Double EMA. I'm guessing you have to do it manually one by one. I'm just trying to find one that's already
My
already
bad,
set.
bro. I'm over here looking at my chart.
Nah, that's fine.
Yeah,
I'm
go to
trying to look for one.
moving average exponential. I think you just had it right there.
No, it's here.
Yeah, man. Go to the second one. Yeah.
Yeah.
All right, now just go to the settings.
So you have to go to settings and do one by one. We have WMAs and
Yeah.
so let's go to EMA settings.
And then just put it on 14 and closed.
Right. So
Go to where it says inputs.
We're gonna do length.
Yeah, where it says length, put 14, and then leave it as closed. And then do the same thing for 21, and then do your colors however you want to do your colors for you to remember.
Exactly.
For me, red is 14.
But I want to keep it on as it is.
21 is yellow.
Because
50 is blue, and then black is 200.
Right. I want to keep it with the same color, so we're gonna go. Basically, I just want to try something out. I know you know how to use Fibonacci. Fibonacci, right? That's what it's called. Fibs. So I wanted to try something out. Right. But with the EMAs along with the Fibs. So we got 14, then we gotta go to the next one, do one by one.
See, like right now, you see how it's just tapping off your support level? How price is tapping off your support level?
Yeah.
If you were in sales at this point, at least with you having this 14 on your screen, the moment that I would see that candle close above the 14 EMA is where you usually look as for your exit point. You follow?
Exactly. Wait,
same way that we do for support and resistance levels. It's the same thing, you know? Use them as a moving level.
Yeah, you have to do one by one. Anyway, let's do another one. The other one that you said is
Yeah, set that up with another timer. Let's see.
yeah, this is just for one. So how do I make a second one here? Input default.
Yeah, see, you really want to drop harder.
Okay, so we got it's 3 of them, right, or 4? Burner, is it 3 or 4?
What's that?
Oh, the EMAs is 4 of them, right?
Oh, I got 4 of them. Yeah.
All right. So red is 14. Then the next one is gonna be 20 what?
21.
21. 21. 21. Yeah, 21 Savage. So it's gonna be what color?
What happened?
What color?
What was it? Oh, the 21 yellow.
Yellow. Yellow like a Latin king. All right, so I got 21 here. Then we got what else?
50 blue.
50 blue.
And 200 black.
It can't be black, so we're gonna make it white.
Whatever you like, buddy. And either way, just looking as support resistance levels. Obviously, the higher the setting level, the higher the average level, because it's per duration.
After the
So if you're
51,
looking at the daily time frame, and it says you're looking at the blue level, which is the 50, then that's obviously the 50-day average.
look at this shit
the 50
dropping.
day
What's
price
the
of the last 50 days. The average.
but what's the last one again? The after 51? Because I want to see something before it keeps dropping. The last one. The last one after 51, you said the white one? I mean the black one?
After the 50, then it's 200.
200. So 51 or 50.
Oh, 50, 50, 50,
right?
50.
Does that really make a difference?
I don't know. Test it, I guess.
1 point.
I don't know what to tell you, dude.
Alright, so that's gonna be white. No racism intended. So now it looks like AU is breaking down, right? Now we're looking into the EMAs. I know someone who's doing a course and they charge for this, and it's so simple. And whatever, you just go ahead and break this down right now.
Yeah, for the EMAs, the reason the way it would have been good was when we closed under 77.41. That was a closure of a candle on the 15-minute that it came under and closed under the EMAs as well as under the resistance. Exactly. Just the regular support resistance level, Exactly. At that point, I then figured if you're looking at the 30-minute time frame, you'll see how the market has basically been ranging in the last couple of days from 77.55 down to 77.15. So that's like a 40 pip range over that time period. It just has 1 or 2 candles that'll finally give it that big push to clear that area. So I figured if it does close under, it would be good to sell it back down. If it does close above 77.41, it would have been good to buy it back up to 77.60. So with the EMAs coming into factor is when I saw them close under, now you're just looking at that as another level of support or resistance. And then when you start following it on the smaller time frames, you start noticing how price starts matching up with it very well. And then you just keep following it like that. And then the moment that I see price close above it on the 5-minute time frame, then I just close out partial or close out the whole position. And then that's it. You sit back and you could either call it a day like people say, or if you see another setup, you take it again. But that's me. You know how I trade, though.
Exactly. Let's see what's going on with GJ. I wanted to, can you explain to me? Oh, look, we're getting the pullback. Awesome. So waiting on retest. Hopefully, as I mentioned to you guys before, we don't get that much of a retest on GJ. So what can happen right now is either we pierce right through the zone and we go into the range. Hopefully, we're on to the next chart. So everything got deleted. No biggie. I marked it. Whoever was in here, they should know what's going on, right? I said it right. Retest. Hopefully we get that. Yeah, man, I don't know what happened to all the writing. Anyway, you guys know what I'm talking about when it comes to GJ. We're expecting that retest here based on the EMAs too. Now that we have them in here, it looks like 151, 590 on those smaller time frames. The 5 minute is acting as resistance, and we're basically creating support at 151, 500, 511 to be exact. So we just need to basically get that tweezer bottom here, or double bottom, whatever you want to call it, to close on the 5 minutes, and then continue up. So this will be the entry at the close of this 5 minute, hoping that it's gonna close above the previous 5 minute bearish for a better confirmation. We still got 4 minutes to go, well, 3 minutes to go, and based on that 5 minute, would actually give you some confirmation that we can go ahead and continue down since we got that retest, and basically we're just creating higher highs and higher lows on the smaller time frames. So anyway, oh, it's right here. My bad. So it was actually to the right. So range zone, retest area. For sales, wait for confirmation. We have to break below that area. Waiting on retest, hopefully. So we got that. Boom. That's good. Range, retest zone. Let's not even call it range. So retest zone. You don't want price to get involved in here right at the bottom of this. So let's leave it as it is for now. And what we're gonna do is that we're gonna wait until 9:30 to see how this 30-minute candle closes. Hopefully it's gonna close. Imagine if it closes with no bottom wick, just completely flat outline, and just right here on top of that. We wait for the next 50-minute candle to close. Hopefully bullish to then continue up. So we're gonna have something like this. Let's get the magic indicator tool. You have your high, your low, and your continuation up, which will be your higher high, higher low, and of course your movement up here, right? To finally retest 152. And let me close this out for now. So yeah, that's Mr. Berner's Instagram. If you guys can see it, zoom in more. It says Mr. Berner right here. Thank you for the breakdown on those EMAs. I wanted them. I forgot. I completely forgot about them. I can actually just set them up in here. What I'm gonna do is just gonna save the indicators just as a whole. So basically, it will be just one indicator when it's actually four with different EMAs. Now FIBS, real quick. What do you think about FIBS? No, Nick, Werner.
Oh, what do I think about fibs?
Yes. What do you think about FIBS?
I don't use it that much, but I've pulled them out on the charts before.
Well,
But that's on much higher time frames. Like I'm looking at that on like the daily, and that's usually only if I see that. Let's say like I've seen a large retracement already happen. I'll then pull out the fibs to see if it's possibly lined up with 618, and maybe the 50 is obviously halfway retracement. You know what I mean? So if it usually meets one of those levels, and I feel that the correction's over, then I might pull the fibs out just for a minute, check on it, see if it respects or if it matches up with one of my already existing support resistance levels. You follow?
Yeah, sure. So basically, 61.8. That's the golden zone, whatever the fuck you want to call it.
And that's something like even outside of trading, bro. 618 is just a natural number. You know what I mean? In nature, in itself. So
6. Oh, I remember something about it. Do you have any breakdown on how it works? Is it 61.8 or nature or whatever?
Why it's important?
Yeah.
No, I'm too zooted for that one. We can watch an AU stuff on the 5 minute too, But
That's fine. That's fine. Don't stress it.
but yeah, bro, like yeah, it's like it's the golden
You know,
ratio
yeah.
because
When I
of
see when I picture Fibonacci, what I see is a seashell. I see not a seashell. You know, those things
yeah,
like
yeah.
that.
No, but you're right though, exactly like the coil and
Right, as
the
a
curve.
coil
Same
pearl.
thing like if you look at like the eye of a hurricane and stuff,
Exactly, basically,
or,
right.
or even a flower, you know, like
Or
a
even a
rose or
rose,
something.
right? Yeah. So anyway, guys, I'm gonna call it a night here. Don't take any stupid entries. Just wait for fucking be enough language today. I'm probably gonna get this is not gonna get it's not gonna get approved. Um, I think we had a pretty decent session, more of a learning session rather than taking trades. I couldn't call any trades actually, guys. You know, I was a little late to the charts, little out of the zone to take a trade, and you know it worked out for whoever took that trade above that area. Congrats to you. Now what we're doing as a team or whatever the fuck you want to be is that you're gonna wait for a um, confirmation here. So you want this candle to not close below this area, and the next candle to close above this area with a strong bullish momentum. So forget about coming in for the low, because catching those lows, calling a bottom, does not work, buddy. That shit fucking hurts. You know, it hurts. It hurts. Just wait for that 30 minute to close. You know, see how it closes. It closes with no top, with no bottom wake. Voila, beautiful, awesome. Just monitor that shit. If you're in it, close 50% if it's going back into that range, and going in by -5 pips. Close 5 or 50%. Hopefully the next one's gonna take you out of it and continue up. But for me, I am done for the day. I took a couple L's on gold. I'm actually gonna stop trading gold for a little longer. Uh, yeah, that shit hurts. But thank you guys for showing up. You guys are wonderful. Looks like we're coming down here. Actually, I want to stay here a little longer. Let's see what's going on.
Yo, just take a glance real quick at AU, just real quick, so you see what I was talking about with the 5 minute and the 1 minute. I was telling you, as long as it stays closing under, you can just hold on to it, and that's how the scalps end up being worth it, you know.
Somebody told you to.
Oh, yeah. I was gonna say, if you can switch back to AU real quick, you'll see what I mean.
Yeah, let's see. Okay, yeah, I'm gonna put on the EMAs.
Just so there's a follow up, so earlier people can piece together what I was explaining, you know.
Yeah, so we're in the 5 minutes. See what's going on. This is basically the trade that Werner is talking about. Then the break of that area to continue down. And what were you gonna say?
Oh no, I was just saying so you can see how I just followed up. But yeah, it makes smaller retracement, but still the same structure,
exactly.
Same price action.
And these 5 minute candles respect each other by not breaking the high of the previous one or the low of the next one.
And then if you check on the 1 minute, you see the same thing. You know what I mean? And even when it came up to its highest level, it just tapped the EMA and then dropped.
Yeah,
which basically just says that that's like the 50-minute average.
Right. Usually when I see people using the moving averages, I really don't know what they're looking at. But now the way you explain it, it makes more sense.
Yeah, a lot of people use them different ways. Like some people will wait to for a cross and then like a retest,
right? Yeah, the cross,
stuff like that. I kind of just watch my normal price action the way I use support and resistance in like zones, and then I just look at the EMAs as a confluence of what side are we really riding on right now,
And I think that's
better. Is it going to be on the support? Is it going to be on the resistance?
Right, and I think that's better because you're keeping it more simple, right? Rather than fucking crossing here, crossing there. It's gonna mean that it's gonna go here, go there. Indicators lag, and
of course.
What we want is just mere price action, just straight up fucking price action coming directly from you viewing the charts and looking at the next target, and hopefully it hits at the end of the game. At the end of the at the end of it, it's just a game of possibilities when you're taking a trade that's out of your session, that you don't know if it's gonna hit your target. That's why it's always better to trade during the session of whatever pair you trade, and you hope for the session volume to push price towards the next target. Um, in my case, I'm only gonna trade DJ for now. I don't think it's even worth to trade gold. So we're getting that close with no wick to the bottom. Wow, I'm actually a fucking magician here. No wick to the bottom on GJ, so that means that the next one is gonna continue up, and looking to the 5 minutes or the 15, we want to see a break of that previous one on the as sort of back of confluence. But other than that, I can see that it can continue dropping. So you want to see a drop, or you want to see a break above. So 30-minute with no bottom wick. We're already at 9:30, which is the Asian, the Chinese exchange, the stock exchange open. So some volatility can come in, but I don't see it. So I'm gonna go ahead and call it a night, guys. Thank you for showing up. 217 cross for moving averages opinion. I mean, how high time frames with other confirmations work. Break above. Yeah. So somebody said break above, and someone else say yes, stay longer. Well, that was in. I appreciate everyone's time and effort, though. Happy sessions. A night, man, this stream seems unreliable. I have a trading view script for all those EMAs. If Carnegie affects a night, man, this stream is unreliable. Unreliable, okay. I don't know.
Well, then fucking leave.
It's unreliable. We'll give you the zoom entries and the zoom settings. You can zoom it out. I appreciate everyone's time and effort, though. Happy sessions. What the fuck? Who the fuck is this guy? Carnegie FX. Shut the fuck up, you dumbass cunt. Fucking idiot. He's probably still in here. Yeah, it sounds like the drugs are hitting him for real. Okay, so guys, remember it's 30-minute with no bottom wick, so that could either mean we're gonna continue down or head up. So anyway, guys, I'm gonna call it a night here. Just to be safe, just wait for at least one 15-minute candle to close above this zone here. Let me take the EMAs off. I don't use them for GJ. And this guy, fucking idiot, on the chat said he has a script for all of them. Okay, voila, you discover fire, you fucking idiot.
Thank you, Mack.
Well, bye, Momo.
Bye. Have a good one, sir.
You too, sir.
Thanks, Matt. Thank you.
Hey, Celine, bye. So everyone.
Thank you.
Bye, Gary. Okay.
Take care, folks.
Who the fuck is Mike Hunt? Yeah, guys. Just play safe
Thanks,
and just
guys.
wait for that. Welcome, Mike. Welcome. Who's that? Cash. Welcome, Cash. So yeah, just definitely wait for that 15-minute to close above that zone here. This is incredible how Rekio does this. He zooms in all the way in like this. It makes the fucking candles huge. But yeah, just wait for that clean break above that area, and definitely you want to see a continuation up. Other than that, if we stay in this zone here, then it will be a no trade night. Just wait till pre-London or London Open. So you got two options in here. You wait for this 15-minute to close, see if it closes above that area, then it will be Gucci to like hold, take a trade in, hold it to pre-London or London Open, and see if you could at least get a couple pips in before you get a pullback. But yeah, thank you guys for showing up. Mike Hunt. Thank you for showing up. But yeah, guys, remember to hit the like button. Remember to share it with your friends, family, bums, whatever. Carnegie FX, the guy that came here with the bum ass saying that he's got a script for EMAs, like he discovered fire. All right, guys, thank you. Lights off. We out.
Bless man.
Bless, man.